Hey everyone, welcome to another session of Inside the Markets with Caleb and Brown. Today we're going to talk about the exciting month of July and what's ahead for the month of August. So let's get into it. We'll start with the month of July. So in July we saw the S&P 500, NASDAQ 100 and Bitcoin all hit new all-time highs. Gains were largely driven by strong Q2 earnings across the board. There was an 86% beat rate in the NASDAQ 100 and S&P 500 and record global M2 liquidity. Sentiment turned in late July. Unfortunately, it wasn't just a pure green candle of a month. On Trump's tariff announcement and disappointing US jobs data, we did see the market start to humble around the end of July. This was an early August pullback as markets reassess macro headwinds. So that's the highlights of what happened in July. Getting into some of the more specifics here. Tariffs, earnings, and M2 drive TradFi rally. I mentioned the S&P 500 and NASDAQ were fueled by Q2 earnings. 86% of companies were in the beat. Mega caps, Meta and Microsoft led the charge and raised guidance. There were all-time highs across multiple sectors in the US, and it really did look like we were kind of in this territory of forever growth. Global M2 money supply reached US $55.5 trillion, underpinning asset price inflation. Trump's July 31st tariff order sparked fears of slowing global trade, triggering a late July sell-off. We're still in the territory of Trump headlines and tariff news, which is ultimately what's going to sway broader markets and in turn crypto markets. So we get to the Fed, another major topic that we've discussed many times. Fed holds steady, but dissent grows. There was a rate decision. The Fed decided to hold rates at 4.5%, with dissent from governors Derek Gilmore and Elaine Nash. These governors argued that pausing risks anchoring inflation above target and noted core inflation remains elevated. Their dissent highlights rising political pressure and adds policy uncertainty. As we see all over Twitter, all over the news, there is this clash of titans between Jerome Powell, President Trump, and numerous governors all chiming into various opinions on what should be happening with rate cuts. Powell remains cautious. He notes slowing growth yet sees inflation risk. Markets split on timing at the first cut. Is the first cut going to be September? Is it going to be delayed all the way through to December? Trump actually labeled Powell a disaster and pushed for immediate rate cuts. Some of those rate cuts are quite extreme. So we'll see if Powell takes a knee or if we keep on having things on hold. The next slide is a critical one. We talk about the US debt dilemma, more borrowing and less growth. US borrowing, it was greater than $1 trillion US in this quarter that's just finished. This is new debt issued, and it's a colossal number. Bear in mind, the debt ceiling in the US has been raised to over $5 trillion. This is unprecedented. So this covers interest and short-term bills. The dollar index is down 10% from H1. This is the worst half year since 1973. So whilst we did see a great quarter in stock performance and crypto performance, some of these macro indicators are looking very dire and concerning. Weak demographics and low productivity have limited growth capacity to service this debt. We have rising debt and decreasing productivity, and the labor force is not able to keep up with this. Is this pushing forward a problem to another generation, or is this a problem that we're going to face in the immediate short term? Back to Bitcoin here. I mentioned that Bitcoin hit new all-time highs. So we hit an all-time high of $123,231 US per Bitcoin. This is wild considering it was only November last year that was celebrating all-time highs being hit around the $60,000 to $70,000 mark. Well, we've effectively doubled that with Bitcoin. We saw it's consolidated around 116K after that mid-July peak. So there was a bit of a sell-off, but in terms of a percentage move, it's fairly marginal. Bitcoin's holding very steady. There were some whales that took profit. One dormant wallet sold 80,000 units of Bitcoin. This was purchased for absolute penny. So this has to go down as one of the biggest realized gains, not just in crypto history, but in the history of human beings making investments. In terms of realized profits, $8 billion was realized in July, signaling somewhat of a rotation. I've mentioned before that historically what we've seen in the crypto cycles is that Bitcoin reaches new all-time highs it stagnates, money then starts to flow down into things like Ethereum, and then the altcoins start to get some love and attention later in the cycle. That's what's happened in the 2021 cycle, the late 2017 cycle, and cycles before that. It's not an indication of what's necessarily going to happen this year, but it is important to look at what's happened historically, as that can help us be more informed about what could happen in the future. Ethereum steals the show. We've spoken a lot about how disappointing Ethereum has been in the last few years. It's really struggled since its 2021 highs. And if you look at Ethereum's performance weighted against Bitcoin since 2021, Bitcoin has outperformed it multiples and multiples and multiples over. A lot of Ethereum investors have been very disappointed seeing Bitcoin hit these staggering all-time highs, whilst Ethereum lags dramatically. That being said, July was a little bit of a turning of the tide. Ethereum soared 56% over the course of the month of July. It closed the month just under $3,700 US. It's its strongest month in over 3 years. So the tide is turning for Ethereum. This was largely supported by major ETF inflows and Sharplink's US $1.6 billion Ethereum treasury position. Ether ETFs are a 19-day inflow streak. That totaled $5.4 billion of inflows, and institutional interest is rising. An Ethereum breakout is starting to come about, and it's no longer living in Bitcoin's shadow as much as what it was previously. So with the great news on Ethereum, a lot of clients are reaching out saying, well, in the past, Bitcoin does the best, Ethereum starts to perform, and then the altcoins start to get some love and attention. So is altcoin season here yet? A lot of OGs are calling a rally. A lot of sentiment on Twitter, X, is shifting towards the potential that we are going to see that altcoin rally. Again, historically, there has been that tie of altcoins following ETH, ETH following Bitcoin. If that happens again, we'll be very happy, but time will tell. So several OGs have called for a rally, and coins like Ethereum, Bitcoin Cash, XRP, Litecoin, Stellar, a lot of these older tokens, older in terms of what we call old in crypto, so anything more than probably 5 years old is considered old at this point, they've started to get a lot of love and attention. Coins like Litecoin had one of their best performing months in several years. Clients should avoid panic trading here. It's important to have a plan and stick to a plan. Speak to your broker if you need to. It's all about setting yourself up for what the future may look like. If you've positioned yourself largely with altcoins, then it's very important to understand historical market cycles and to have a profit-taking agenda in place so you're not being led by emotions and short-term knee-jerk reactions, but you're largely making informed decisions and defined strategies that you can stick to. Of course, we'll keep you updated with what the altcoin sector does. Dollar down, crypto up. So whilst Bitcoin's performed very well, it's largely performed well upon the debasement of the US dollar. If people are holding US dollars, they're disproportionately worse off relative to Bitcoin. If people have been holding Bitcoin, they are exceedingly better off because Bitcoin has been hitting all-time highs. A weaker US dollar makes hard assets like crypto much more attractive, particularly Bitcoin, of which Bitcoin remains highly correlated with global liquidity, inversely correlated to the DXY. Crypto may be one of the few ways to outpace currency debasement and preserve wealth. As more money is being printed, money supply is increasing, the finite, scarce nature of Bitcoin likens itself a lot more to gold. This whole digital gold idiom is really starting to kick in now, with a lot of traditional investors who previously did not speak well of cryptocurrency starting to actually speak very highly of the scarcity of Bitcoin and what that means in a world of constant money printing. It's important to monitor this dynamic over the coming months and years. It's a critical point here. So we're going to look further ahead into what is happening in August. We have some really key headlines in August. So August 5, we had the Senate feedback on crypto clarity bill. That did very, very well and gave the market a little bit more of an upside rally. August 7, we had global tariffs take effect, assess trade flow and commodity impacts. Unfortunately, tariffs and tariff headlines are still largely driving how the world works economically, and crypto is going to be a victim or a benefactor of that one way or another, depending on what that news is. Critically, August 14, the China tariff pause will expire. Watch currency and equity responses here. This is going to be a very critical date for cryptocurrency. September 17, a little further ahead, is going to be a key date with the next FOMC meeting. Are we going to hold rates at 4.5% or are we going to start looking to aggressively cut? That is going to largely drive what cryptocurrency does. So some final thoughts to wrap this up. July's rally underscored the power of liquidity, earnings beats, and policy headlines. Crypto remains a key hedge against currency debasement, namely the US dollar. So position thoughtfully amid times of volatility. Our team stands ready to guide clients through all these triggers, these major events. We've been through bull markets, bear markets. The business was started when Bitcoin was only a few $100s. So we've seen all of this before, and we're very excited for what lies ahead in the rest of the month of August. Thank you, and until next time.